This is the briefing for Friday, February 17th. Well, as you remember from previous briefings, I've been discussing the possible strategy that the stock indices are in a three-step counter-trend rotation, where this is a run, where you have a run, pause, run, pause, run, pause. This is a downtrend on a weekly basis. And then we're getting something greater in degree of time and price that would violate the lower highs that we see right through here, and that projected where there's equality between legs 1 and 3 up to about the 437 area and the spiders to 440. Now the key here was getting through 410, and that is this peak right here, and it goes back to this peak here as well. But you can see now this is a weekly chart, so each candle is a week of trading. So for 3 weeks we have been rotating around this 410 area and really have not gone anywhere. Day traders certainly can make a few points here and there, but for the most part this is just very difficult and very choppy market that we've been trading through. The key to what's happening here though was in market breadth. Now as you can see here's the peak in breadth. And you can see it's on that first candle that starts to break out of this 2-week rotational pattern. And as this rally has continued on a weekly basis, you can see what's been happening with market breadth. It's been declining and declining pretty dramatically. And even into last week we got a little bit of a spike, and then this week we're spiking back down again. So it does appear that this rally here, this leg of this rally, is weakening from an internal perspective. You can also see this is volume in the spiders. Volume really not doing anything in the spiders, at least at this point in time. Now looking at the Qs, you can see representing the NASDAQ, basically the same pattern, and you can see this is where the projection of the next high would be, which comes in right around the 334, 335 area. But even the Qs have been rotating around this 300 area, not able to break out either to the upside or the downside. Now I want to go back to what I covered in last night's briefing, and that was a little bit shorter time period. Now you can see this is the spiders on a 15-minute period, and this is pretty clear. This is just a rotational pattern. This is probably 4 or 5 days of trading, just a rotational pattern where you could have sold the high, bought the low, sold the high, bought the low, but it was very, very choppy. I stood aside for most of this trading, but in yesterday's trading, we got a breakdown of the price breaking down below 410, closing at the low of the day, and that suggested that we were going to see follow through in today's trading, and that if that follow through occurred, to watch for a possible divergence in market breadth. So you can see we opened in today's trading, and we opened lower, following through from the close of yesterday. And then we did have a slight divergence in market breadth. You can see that it improved slightly right through here. And then, of course, we spent the rest of the day in rotation until we tested the high of the day today and spent the rest of it in rotation right at the high of the day today. So breadth expanded fairly nicely, but it still ended with negative 411 shares. In the NASDAQ, it was basically the same situation. You can see the low of today right there in the Qs, and you can see where the slight divergence in breadth occurred as well. And then of course we had this upsloping move of improvement in breadth where it closed at positive 200 shares, and then this rotational pattern right through here. Now this is really important. I've been talking about this in the briefings during the week for subscribers, and then on the weekends. This 410 area is extremely important in the spiders, and 300 is extremely important in the Qs. Breaking back through those levels now is going to put the price in this rotational pattern once again, and the same thing with the Qs. And the Qs rotational pattern has a slight upward momentum to it, as you can see, but it's still a rotational pattern. So basically now, from a short-term perspective, what we have here is the closing of today, this rotation right through here. This is a 15-minute chart. Rotation right through here will give us potentially the next possible, at least daily move in the indices. If we break to the upside, then the higher probability is we're going to see the gap close, and we'll potentially break through 300. The same thing with the spiders. We'll break through this high, then we'll potentially break through 410 and be back in this rotational pattern once again. Breaking to the downside of this rotational area is going to suggest a test of today's low, and the same thing with the Qs, which would then suggest the potential for an additional move to the downside. Keep in mind that as long as we are below 410 in the spiders and we are below 300 in the Qs, then this, let me switch this back to the spiders. This three-step move that I've been talking about is invalid. So it was really extremely important in yesterday's trading to see the indices close below, or see the spiders close below 410 right there. This is a daily chart, and then to have follow through in today's trading. Now, in terms of the Qs, you can see the same thing. It closed it closed just above 300 yesterday, and today traded through 300 and closed at 301.16. So it is still above, holding up a little stronger than the spiders, at least at this point in time. Now, yesterday we were slightly oversold. The same thing in the NASDAQ. So we've worked off a little bit of that oversold condition, but this does not preclude the market from trading lower in Tuesday's open. The markets are closed on Monday. So it does not preclude them from trading lower. You can see net volume on that rally was declining as well. This is up volume minus down volume. And then, of course, looking at total volume, initially this move here had fairly strong total volume on the NYSE. But then, of course, as we came into that high, volume has been falling off pretty dramatically. Same thing in the NASDAQ. You can see the total volume falling off as well. So basically what we're looking at is, or at least I'm going to be looking at, this area here in terms of a short-term possible trade location. This area here in terms of whether it's able to break through this area and then break through today's low would then suggest that the probability of this three-step longer-term counter-trend rotation I've been talking about is basically becoming a very small possibility or probability, at least at this point in time. So watch these areas on Monday, and especially if we break today's low, then I would suggest that we're going down to test much lower support levels, and that would be basically the 390 area in the spiders. Below that, it's going to come in really right about 375 and then down to 370. Have a great weekend. Have a great President's Day on Monday, and I'll pick this back up on Tuesday afternoon.